Stablecoin volumes are at all-time high. DEXs are at all-time high. New token launches are at all-time high. You've got literally everything that you could want from an investing standpoint happening right now, except for a bunch of whiny people on Twitter because they lost 50% on a meme coins.
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. We are now featuring quotes from listeners on the show. Today, we have one from Crypto Peter B., who responded to the recent episode on DeFi with Stani Kulachov and Rune Christensen. He wrote, "Challenge to ETH folks, go one GD conversation, goddamn conversation, I'm guessing, without saying the word Solana or monolithic. Solana folks do it all the time. They just talk about cool stuff they're building. Can't remember the last time I heard an ETH convo that didn't mention Solana. JFC, rent-free guys." But on YouTube, a pro-ETH listener, Joe Fang, wrote, "TLDR, don't bet against Ethereum." To have your comment featured, write a review of the podcast overall, or leave a comment on our video on YouTube or X. This is the February 14th, 2025 episode of Unchained.
Somnia processes over 400,000 transactions per second with sub-second finality, powering scalable mass consumer apps and reactive features fully on-chain. Learn more at somnia.network.
Today's guest is Jeff Dorman, Chief Investment Officer and co-founder at Arca. Welcome, Jeff.
Hi, thanks for having me back.
Everyone's talking about how sentiment is down bad, especially on crypto Twitter. And excluding Ethereum, which is the only top 10 coin that's down year over year, the sentiment we're seeing on Twitter just really seems to belie the actual price action. And I wondered if you could talk a little bit about your blog post from this week called "Fed Up with Misinformation," in which you broke down why you thought, what you're seeing from the community does not match reality.
Sure. Yeah. Every once in a while I write with an angry tone. These last couple of weeks have certainly been that. Not because prices are down, honestly. Like, that doesn't bother me. I've been doing this long enough, 25 years now, between stocks, bonds, and now crypto, that, I'm pretty numb to markets going up and markets going down. But what really was bothering me the most was that, I've been doing this now professionally at Arca for 7 years. There's a lot of people in this space who have been, dedicating basically a decade of their lives to the growth of blockchain. And a lot of that is on the education front and actually trying to explain what's happening with the growth of blockchain and the growth of this asset. And it just seems like that's all just being drowned out and lost now with a lot of just dishonest and flat out incorrect takes on the market. And I think a lot of that is actually what's causing this break in sentiment from price right now. Is the bad information and the misinformation seems to be traveling way faster than anything that's actually real. And actually, it's funny, I saw Matt Hogan from Bitwise echo something similarly right now. He had a tweet recently that said, there's an absolutely massive disconnect between retail and professional sentiment in crypto right now, where retail sentiment is the worst it's been in years. But meanwhile, kind of professional investors, and especially from the TradFi world, are extraordinarily bullish. And it's like living in two separate worlds. And we feel the same way right now at Arca, because we straddle that line quite a bit between, your sort of native crypto, in the trenches, degens, and this sort of TradFi world. And the TradFi world is seeing nothing but positive headlines. They're seeing Bitcoin near all-time highs. They're seeing gold near all-time highs. They're seeing stocks near all-time highs. Interest rates are coming down. The VIX is lower. You've got Trump talking about crypto. You've got the SEC and CFTC becoming more positive for crypto. You've got all these working groups happening. Like, all they're seeing is the positive. And then meanwhile, here in the trenches, especially on crypto Twitter and in certain Telegram groups, you would think that, crypto has no chance of succeeding, even though objectively, this is the least risky crypto has ever been as an investment asset class in the history of crypto. So it's really striking what we're seeing. And specifically, I'll just give you a couple examples of what I mean by like the bad information that's out there. I don't mean to call out anyone in particular because I just one that happens to be top of mind right now. But like, NYDIG, for example, is a very crypto native company, right? NYDIG has been around for probably most of the decade. They obviously are very entrenched in crypto. And they came out with something last week that basically said, talking about how this is a Bitcoin focused market and alts are getting killed, and alts are getting killed specifically because there aren't any fresh narratives and use cases. And I'm just like, it's 2025. How are we still calling everything that's not in Bitcoin in alt? I mean, this is an asset class now that has very distinct sectors, right? We have stable coins, we have DeFi, we have gaming, we have NFTs, we have AI, we have all kinds of different assets within Web3. We have RWAs. Like, how are we still using the term altcoin? And then how are they saying something like, we don't have any fresh narratives and use cases? The US president just issued a token. An African nation, Central African Republic, just issued a token. There are 22 states that are either pushing for or have proposed legislation to establish a Bitcoin reserve, as well as over a dozen countries. We have the SEC commissioner released the most crypto-friendly priority list ever, basically saying that anything that isn't fraud and is currently legal is okay by her. We've got banking leaders like Bank of America and Morgan Stanley and BlackRock talking about how everything's going to be tokenized and how they want to participate more. We have the largest prediction market built on blockchain. We have stable coins at all-time highs. We have new AI agents interacting with each other every day via crypto rails and DeFi. And we have decentralized exchange volumes at all-time highs. So I just cannot for the life of me, and forgive me for being so passionate, I just cannot for the life of me figure out how this misinformation continues to penetrate the crypto world.
Well, okay. So I have a theory, and I'd be interested for your take on this. And I think I've also heard other people talk about this, maybe on some of the shows that we do here, that the reason sentiment is down so bad is because meme coins were the main trend this cycle. And the vast majority of people that have participated in that trend have lost money. So, all the stuff that you're talking about, that's not really like where retail has been. It's not like what their attention has been on. It's definitely been on the segment where there's been just kind of like mass exploitation. Like, I'm sure you saw the Dave Portnoy stuff. Like it just feels like that's what the masses are enduring. And all the other things you mentioned are, yeah, you're right. They're very positive. And I would agree with you that when you have a long time horizon, that those are all the things that show we're in this like massive inflection point that is already starting to change the trajectory of crypto. But I feel like when you just look at the number of people who have been impacted either positively or negatively in the last year, the sheer number of people who have had a bad experience probably outweighs the number who've had a good experience.
But that's very short-term thinking when you say, I mean, that's over the last
right,
4 to 8
but that's
weeks.
what I'm saying. So that's, no, not 4 to 8 weeks. The meme coin trend has been around for over a year. And it's not like I'm disagreeing with you. I'm just like giving a theory as to why we're seeing this disconnect.
Right, but okay, but again, this is the part I would echo is that it's clear for probably the first time ever that blockchain is here to stay and is not going away, and that there are very distinct different use cases of blockchain technology. So meme coins being one of those use cases, and not even really a very big use case. I mean, the size of the meme stocks, when you look at GameStop and Bed Bath & Beyond and AMC, is a very meaningless amount of the total stock market. The same thing with meme coins. It's a pretty meaningless size of the entire crypto market, yet it just gets a disproportionate amount of press time.
Wait. So you don't think that there's that the majority of people in crypto that participated this last year were participating in that area?
Well, I mean, the market cap of publicly traded tokens right now is 3.3 trillion. Meme coins is what, 50 billion of that? I mean, you get rid of Doge and it's even less. I mean, like it's not a big part of the market. Right,
but that's what the big trend was this year for retail is what I'm talking about.
Well, but then you're implying that something that is less than 2% of the overall market is affecting 100% of the mind share. I mean, that can't be true.
I mean, I'm talking about retail. Like when people are, trading only like $100 or $1,000 or even as much as like $5,000 to $10,000, it doesn't compare to the whales. So like, I think like dollar for dollar, it doesn't make sense from that perspective. I'm just talking about like actual people. Like absolute numbers of people, I guess is the way to think about it.
But okay, so and again, we're projecting what others think, which is always a dangerous exercise. But if you're trading meme coins, relative to, again, like there's a difference between investing in a DeFi platform that has volumes at all-time highs, has a buyback program to amortize their tokens, and you can value on a price to sales ratio versus a meme coin, right? I mean, regardless of what your financial sophistication is, you're not comparing something like, Radium, which is buying back its own token and has a real business model with, a bonk or Fartcoin or something like that, right? So there is at least some differentiation, even in the minds of the least sophisticated retail investor that you might be talking about. So if you're investing or trading in meme coins, it is a form of gambling. There's no other way around it, right? And anytime you've been to Vegas and the glitzy, huge, amazing casinos, don't forget that's a very small portion of the overall gambling market. The rest of gambling is being done at a 6-foot ceiling casino in Reno or in New Orleans or in some Native American casino off the highway that has 6 people chain smoking by a roulette wheel. So when you go into gambling, that the majority of people are going to lose, but it is still a form of entertainment and they keep coming back, right? The casinos don't go out of business just because a handful of people are really upset that they lost money and are loud and obnoxious about it on Twitter.
So, but my question is just like, you don't think that is perhaps a valid explanation for why it is that sentiment doesn't match the actual fundamentals that are changing?
Well, no, I think it's beyond just meme coins. I think in general, if you look at the market from November 4th to December 17th, and I use December 17th as the fulcrum there, just because that was the day the FOMC came out and said that we're going to pause the rate cuts. So from November 4th to December 17th, basically everything went up, and a lot of things went up 300 to 500%. I mean, if you look from December 17th to today, February 14th, it's been the exact opposite. You have things that are down anywhere from 50 to 80%. There's no question that price drives sentiment. And you're certainly going to feel a lot better when you're getting richer, and you're going to feel a lot worse when you're getting poor. That's natural. What I'm saying is the sentiment of this cycle is over and crypto is dead because of prices going down. I mean, we've just seen this 15 times in the last 5 years, and it's never been true. If you look at, for example, go back in, I wrote, May 28th was a good example. May 28th, I wrote that the past week, this is May 28th of 2024, I wrote the past week was the most bullish and important week in digital assets capital markets history, because that was when Trump basically did a 180 and started talking about Bitcoin and using that as a way to increase his voter base, and ultimately was sort of the beginning of what ultimately took place 6 months later with the election. Some thought I was exaggerating, but I think upon reflection, if you look back at May 28th, it really was the most important and bullish week in digital assets market history, because it changed the course and the trajectory of blockchain from the old restrictive regime in the US to what we have today. So, naturally you would expect the market to have shot higher on that, right? Absolutely not. From May 28th, 2024 until the lows on September 6th of 2024. So you're talking a full 3.5 months, the total crypto market cap fell 28%. And Bitcoin barely fell at all. So if you look at Bitcoin, it was closer to 35 or 40%, right? During that time, what happened? People were shouting from the rooftops that the crypto was dead and the cycle was over and that this would never happen again. And we all know what happened next.
You don't feel like there is any rational reason whatsoever that this sentiment should even exist. Is that what you're like?
Absolutely.
You can't find any explanation for why the sentiment is like this.
None. I mean, investing is really hard when you just constantly are getting things wrong, right? You have a thesis that's invalidated, or you have a thesis that's whatever, and it's like, oh my God, we're just getting things wrong left and right. That's hard, right? For example, let's say you were investing in nothing but NVIDIA and chips and data centers and those that were providing expensive access to building out AI, and then all of a sudden DeepSeek comes out and it totally throws your thesis off. And you're like, oh man, I have to actually rethink my thesis. I'm wrong because DeepSeek just proved that you can do this cheaper, and it's going to use less chips, and it's going to use less data centers. Okay, that's hard. That's a change in the thesis. But when your thesis is actually being validated to the upside at the same time that price is going lower, that's an all-in buy moment. And again, we've seen it 100 times in this market where the market is just wrong for short periods of time. I mean, that May 28th to September 6th period, for example, the market was just flat out wrong. We were down 30%. And then from September 6th to November 4th, to just from September 6th to December 17th, the market shot up again, more than doubled from $1.5 trillion to $3.3 trillion of total market cap in the crypto market. So sometimes markets get it wrong, especially in crypto markets, because it is such a sentiment-driven and social-driven activity. So, again, there are times when prices should be down. 2022 was a great example, right? At the end of 2021, the Fed started raising interest rates. They raised interest rates, 5 standard deviations above what anyone was expecting. And counterparties were failing left and right. 2022 was basically the equivalent of 2008, where it didn't matter what you were invested in. It mattered who you were invested with. because your counterparties were failing, right? In 2008, it didn't matter if I had the greatest short on in the world. What mattered was, did I hold it at Bear Stearns or Lehman or MF Global, because they were going out of business. Well, the same thing happened in 2022. It didn't matter if you owned Solana or you owned Bitcoin. If you owned it with Genesis or FTX or Celsius or BlockFi, you were in big trouble, right? That was a reason. That's a reason to panic. That's a reason for markets to go down. If you had a long thesis in 22, you were completely invalidated on that thesis based on real activity that was happening. That is not happening right now. Stablecoin volumes are at all-time high. DEXs are at all-time high. New token launches are at all-time high. You've got literally everything that you could want from an investing standpoint happening right now, except for a bunch of whiny people on Twitter because they lost 50% on a meme coin. So it's just an insane divergence.
So you do agree that this sentiment could come from meme coins?
I can certainly agree that is a part of it for sure. I don't know, because again, it's a dangerous game to put words in people's mouth, but that's certainly part of it. But I would also say, like, there are other parts of the market that are down 50 to 60% as well, that are not meme coins, that are depressing people just as much. I mean, here, I'll give you an example. Robinhood just came out with like record numbers yesterday. Go look at a chart of Robinhood. Robinhood was basically dead. The stock went nowhere from March of 2022 until January of 24. And it has 5x'd since then. And every time they come out with new information about how good they're doing and how much their volumes are up and how much their revenues are up, the stock goes up. Coinbase, same thing. It was dead for a year and a half. Now, all of a sudden, equity investors are rewarding them because their volumes are up, their revenues up, right? The stock is going up with the actual growth of the business. Now go look at a chart of like Radium or Jupiter or Uniswap or Aerodrome or, Hyperlink. Well, Hyperlink is a bad example because it's newer, but you look at some of these DEXs that are having the exact same success as their counterparts in the real world, your Robinhoods and your Coinbases and your Galaxies, but the stock is down 50% because people are just all lumping it together as if it's one thing. And again, it's fine. Like that's...
Yeah, it depends a little on like the tokenomics and stuff too, even.
So. Every one of the ones I just mentioned is a real business that uses revenues and profits to buy back tokens. So it is, it's as akin to a stock as you can imagine. And again, like I'm saying, that is also driving sentiment in some ways, that you're just seeing prices down like this. And my counter to that, as I said, is that that's when you invest. You invest when sentiment is low and fundamentals are higher. That's the best investing opportunity you will get. And I don't always scream like this from the rooftops when price is down, because again, sometimes price is down just for a real reason. But there have been several opportunities in the crypto world over the last 4 or 5 years where this same thing happens, where you get sentiment down and everything else up, and it is the buying opportunity of a lifetime.
Yeah, well, so in a moment, we'll talk a little bit more about kind of the reaction to some of these trends that have been happening in the space. But first, a quick word from the sponsors who make this show possible.
Somnia's high-performance blockchain achieves 400,000 transactions per second, sub-second finality, and sub-cent fees. Perfect for mass consumer applications like gaming, social, and more. Somnia's architecture unlocks reactive features like on-chain event triggers, native timers, and verifiable random functions. With Somnia, developers can build fully on-chain applications that can scale to millions of users. Start building the app you've been dreaming about with the help of Somnia's $10 million grant program. Learn more at somnia.network.
We have another listener comment, this one responding to Stani Kulachov's assertion that Ethereum's tooling advantage makes it the only choice for complex DeFi. On X, Yulia Mihailescu wrote, "Why leave Ethereum? Why leave any chain? At Laura Shin. The future must be multi-chain. I know true builders will always start where the big network effects are. That can be Ethereum yesterday, Solana today, ZZZ tomorrow. But they will always want to reach more. No need to leave any chain. We just need to make sure full interoperability and composability across chains is seamless." Again, if you want to hear your comment featured on the show, please write a review or leave a comment on an episode on YouTube or X. Back to my conversation with Jeff. So I did also have to ask you a little bit more about the meme coins launched by then President-elect Donald Trump 3 days before he took office, and Melania Trump. And I'm sure you're quite well aware, a lot of people were not generally supportive of those. You seem to take them as like a bullish sign. What did you make of the fact that people were criticizing them, and why do you feel positive on them?
Well, to be clear, I'm not positive on the Trump token itself. I think there's a big difference between the signal and the reality, right? The reality is he launched a meme coin. It has no purpose. It has no financial purpose. It has no utility. It has no anything other than social vibes, right? Like when I look at evaluating any sort of a digital asset, I'm generally looking at those three things. Does it have financial value? Are there real cash flows? Are there real revenues? Is there some sort of a buyback? Is there some sort of like financial mechanism that I can value this on? Or does it have utility value? Meaning, can I use it for something? Can I use it to pay gas? Can I use it for collateral? Can I stake it? Can I do something with it? And then does it have social value, right? I generally won't invest in anything that's 100% social value and has no financial and utility value, and the Trump coin fits that. I don't care if others do, but that's not interesting to me. But what's interesting to me is what it signaled, which is if the president of the United States is issuing a token, anybody who is a potential token issuer in the future is now has a green light to do it. And we saw what the Trump token did, right? They launched it on Meteora. They had, I believe it was MoonPay, where you could link your credit card and sign up. It was like 1 million new wallets came into the Solana ecosystem to buy this Trump coin. And guess what? They didn't leave. If you look at Solana stablecoins on chain, it wasn't like the money came in, people made money and then took the money off. Solana stablecoin on chain is the highest it's ever been. It went from 6 billion to 12 billion. So that's a huge onboarding moment for the market, even if the specific asset itself, the Trump coin and the Melania coin, I think are kind of dumb assets. What it did in terms of bringing people in is huge. And what it signals for future issuers are huge, right? People who know me, I started writing about crypto in 2017. The first blog I ever wrote wasn't even on our website because we didn't have a website at the time. And I was talking about how I've been a Starbucks shareholder for 20 years, and I literally don't drink coffee. I get nothing out of Starbucks other than stealing their Wi-Fi and using a bathroom. Starbucks gets nothing out of me because I don't do anything to promote them or help them. It is a completely transactional relationship of me being a passive shareholder and hoping that Starbucks does well, but getting nothing out of it. Meanwhile, the things that I use on an everyday basis, I have very little financial rewards from, right? There's this massive disconnect between customer and shareholder in a lot of cases, right? Look at like a Venn diagram of McDonald's, for example. The investors in McDonald's are not the customers. The customers of McDonald's are not the investors. And you could do this same exercise with 100 different entities and organizations around the world. So my thesis that I've been running with for literally 7 years is that eventually every celebrity, every company, every municipality, every sports team, every university is going to issue a token. And you can see where this is going to head one day, right? New York City is going to have a token where that token is going to be used for discounts on the subway and maybe fast pass at JFK and LaGuardia. And ultimately, maybe you can use it to get dibs on, using Central Park for wedding pictures or your kid's birthday. And then if there's a surplus in New York City, maybe they dividend it back to you as a token holder. And all of a sudden, if you want to bet on the growth of New York City when you live in Argentina, you no longer have to buy a condo in New York City. Like, the old way of betting on New York City to grow would be to buy real estate. Now you can actually buy the token. You can see again, like Harvard University is going to issue a token one day, and all the boosters and donors are going to get a token in return. And that token might be able to be used for tuition 18 years later when your kid is older, or you could trade it for Yale token or for, Duke token or whatever. Like what we're headed towards, the optionality and the permutations of what these tokens can be are unbelievable. I could literally sit here all day and just list ideas for what tokens are going to be. So I don't like the Trump token or the Melania token itself because it's boring. It doesn't do anything. I don't like the Central African Republic token itself because it doesn't do anything. But that doesn't mean that there aren't creative people thinking about what else can be done. And for the first time, the Trump token is giving you a green light to actually do it. So I spent a lot of years as an investment banker. Investment bankers are incredibly creative because they only get paid when they come up with creative financing solutions. Well, guess what? Tokens are the greatest capital formation and customer bootstrapping mechanism we've ever seen. And eventually, investment bankers are going to start pitching these ideas to companies and organizations as a really good means for not only raising capital, but engaging your audience and growing your business. So you look at like what Binance has done, right? Binance is the most successful crypto company ever, going from nothing to a couple $100 billion market cap in a matter of years. Part of it was because of the BNB token, right? They issued the BNB token to their customers. They used a portion of their profits to buy back the token to align their customers with the growth of their business. They had the BNB token used so that you could get discounts on their platform and use it for collateral to trade options and futures. I mean, everything I just said, it's part financial, because you have real cash flows driving the token. It's part utility because you can use it, and it's part social because people actually care about Binance. Well, guess what? Every customer on Binance became a power user and an evangelist, and that's why Binance grew so fast. Like, other companies will eventually see that formula and say, oh, just because Trump issued a stupid meme coin doesn't mean I have to issue it in the same way. I can issue a much more powerful token, and the green light is out there from the president that it's okay to do this.
Yeah, well, I agree with you on all of that. I just, yeah, like I was saying earlier, I think the sentiment comes from somewhere, but you're right, we're not going to know. But I did want to ask you about something else that's been a large topic of discussion generally, been creating a lot of controversy. You probably saw Chao Wang of the Alliance DAO last week and said that over the past year, he had seen portfolio companies launch simultaneously on both atop Ethereum L2 as well as on Solana. He felt that those on the Ethereum L2s had really struggled, whereas the ones that at the same time had launched on Solana had found good traction. And interestingly, I had a discussion with Stani Kulichov and Rune Christensen earlier this week. And when we released that episode, people were attacking me just for asking them questions about these kinds of things. So I was curious for your thoughts, like, why do you think it is that Ether has struggled price-wise? Some people are just saying like it's FUD and whatever, and others, which I'm sure are saying there's like real issues with scaling, fragmentation, UX. The interests of the L2s and Ethereum, the token, are not generally aligned. Solana has been grabbing market share in terms of users and devs. Like, what do you think is happening with Ether? Do you think it's FUD, or do you think that there are real problems that need to be solved?
So layer one blockchains have always been, and don't forget, I've been doing this for a long time, but I am much less technologically savvy than a lot of people who come through crypto, right? A lot of people come through crypto either in a libertarian lens or a technological lens. I come through purely from a financial lens, and that I enjoy investing in new technologies, no different than I did in the debt and equity world. So I have less to offer in terms of the future of Ethereum versus Solana from a tech standpoint, but I can tell you a little bit from an investing standpoint, which is that all of these layer ones are really, really, really hard to invest in. So like, if you go back to what I mentioned earlier about, something has to have both financial value, utility value, and social value. Layer ones, in theory, have all three, right? They have real financial value in the form of MEV and the ability to actually generate transactional revenue when there's apps within the blockchain that are being utilized, right? No different than the Apple App Store generating revenue every time there's apps being built in there and transactions happening. So, as a basically a financial app store, the layer ones actually do generate real revenues and cash flows, and you can see it with regard to buybacks and burns. But in the case of Ethereum, they clearly have utility value in the sense that you can pay gas, right? You can use it for staking, collateral, other things. So they're very useful, and they clearly have a social value. In the sense that people are pretty tribal around their communities and around which blockchain they care about and which one they support. Just because I can identify that they have all three doesn't mean I know what percentage of those three is driving price at any given time, right? It could be only 2% of the price is being driven by financial and 3% being utility and 95% being driven by social. It could be the other way around. So it's very difficult to figure out what's actually driving this. And then on top of it, you have sort of this, political stance, right? Like, meaning like Bitcoin, for large parts, kind of stands for libertarianism, right? It's sort of decentralization, sovereignty, fixed supply, hard money. There's definitely a cyberpunk kind of influence with the early adopters. Ethereum has always been kind of left-leaning, more socialist, more technocratic, right? It's more about fostering collaboration and the collective efforts of DAOs, and certainly favoring governance more than anything. In some cases, they're even public goods and funding mechanisms, and certainly more experimental, right? Solana, on the other hand, has all been about capitalism and efficiency, right? It's speed to market. It's how fast can we do things. It's lowest fees, has a huge venture capital backing. There's certainly trade-offs with all those, and it's very difficult from an investing standpoint to really make a bet on any one of these when you recognize that 99% of the world's assets aren't even on blockchain yet. Like I mentioned, there's This is a $3 to $5 trillion industry when you look at all the assets that are available in crypto. The stock, bond, commodity, real estate, and currency market is $500 trillion or more. So meaning like the world, if you think about what blockchain really is, it is essentially the greatest mechanism we've ever seen for moving assets, right? Like we have a very simple thesis over the next 5 years. Arca. Blockchain technology has proven to work incredibly well for asset movement and transfer, but the majority of the world's assets, stocks, bonds, real estate, et cetera, are not yet available on blockchain rails, partly due to regulatory and workflow issues. But those are starting to break down, as we're seeing in Washington and elsewhere. So as these barriers between crypto native assets and TradFi assets start to break down, which again is clearly and unequivocally happening for the first time ever, more tokenized assets are going to be issued and traded and sent on chain. And the beneficiaries of that will, of course, be whichever layer one blockchains end up supporting this growth of these transactions, and whatever DeFi applications built upon these chains, you get the bulk of those transactions.
Just one question. If you were to have to bet on only one horse, would it be Ethereum or Solana?
Well, that's what I was getting at, is that honestly, if I were just only going to bet on one horse, I would pick some random obscure blockchain that trades at $500 million and bet on that one. Because I don't think as big of a lead as Ethereum and Solana have, that any of it is actually that big of a deal, because they haven't done anything with any of the world's assets that matter yet. So that's what I'm getting at, is like a $400 billion Ethereum versus 100 billion Solana versus, random chain XYZ. We haven't even come close to seeing who's going to be the winner yet. The winner is going to be determined by which chain Walmart uses, and which chain the U.S. government uses, and which chain JP Morgan uses.
Wait, you think that the winning chain will be one that takes real world assets and puts them on chain? You think that's
100%.
The future?
100%. Look,
I don't know.
There are no crypto assets that matter right now. What crypto asset actually matters right now? Name one. U.S. Treasuries matter. U.S. Treasuries are being moved on Avalanche. And
yeah, no.
So Bitcoin. Bitcoin is the only actual asset.
The way that I think about it is I think about how snail mail is completely practically irrelevant in our lives. And pretty much nearly everything that we do all day is all digital communication. And so I also think that real world assets have an issue where they're not natively digital. So there's just all kinds of weird, random little things that you have to kind of account for when you are trying to move them on chain. Whereas things that are inherently digital, they just have certain advantages. And so I feel once all this is fully mature, I think that crypto native assets are going to end up being bigger. And I know it's a long time scale, but
what crypto native asset besides Bitcoin are you going to be using?
It's we're in 1999 and you're of the dot-com era, and you're asking me what's going to be important in 2025. Of course, I don't know. It's probably, or maybe it doesn't exist yet, but I'm just saying that I do think that eventually digital transactions will be
let's stick with,
and much bigger than the crypto.
Well, let's stick with what you just said. Let's stick with what you just said, 1999. Okay. In 1999, there were new internet native companies that were called .coms, right? You would put .com on the end if you were an internet native company, meaning you were a company that would not have existed if not for the internet. And because of the internet, all of a sudden you could exist. Things like Amazon.com, things like Pets.com, things like Priceline.com, and thousands of others that we forget about because they fit, right? That's not what made the internet the internet. What made the internet is when every other company that has been around for 100 years started using the internet, right? Walmart became an internet company. JP Morgan became an internet company. Domino's Pizza became an internet company. Every government around the world became an internet company. Every university became an internet company.
No, I think the things that define the internet are things like Twitter or Netflix, things that are, they're not offline things that got an internet website. I think they're things
Netflix was an offline. Netflix was an offline thing. You used to have to go get DVDs in the mail.
But it wasn't Netflix. It was Blockbuster.
Netflix was literally, you would sign up for either 1 CD, 3 CDs, or 5 CDs a month, and they would send them to you in the mail.
But this way, it doesn't matter what Netflix's personal history was. It's more Netflix only became a success once it was just purely digital, right?
Right. But that's the point. You took a non-native internet business called Netflix, and they became an internet business by utilizing the internet. So the same thing is going to be true right now. So okay.
So
It would
30
be
years from
ridiculous.
now, it's 30 years from now, you think, like, obviously this is like too long a time scale for a bet, but you do think at that time it will still be like TradFi assets just in an on-chain wrapper will still be bigger
Yes.
than crypto assets. Okay, yeah.
1,000%. So okay. Well, you would never call something a .com right now, right? Because you'd be laughed out of the room. That'd be insanely stupid to call something a .com because everything is a .com now, right? So that's where we are in crypto right now. The last 7 years of crypto was your .crypto era, right? That was the era where the only things that existed in crypto were native crypto businesses called .cryptos, right? You literally would not have existed if not for crypto and blockchain, and now you do. The next 27 years are going to be regular companies who are using blockchain. They're going to put the assets that people care about. Guess what? As much as Solana is some cult cool thing, it's $100 billion. Tesla and Tesla and Nvidia and Facebook and Microsoft and all these other companies are $1 trillion companies. Look at October 8th, I think. October 8th was the day. Hold on, let me finish if you don't mind. October 8th was, I think, the day, or October 6th was the day when the yen carry trade was breaking down, and you had massive volatility and futures down 7% overnight. And you wake up Monday morning and every bank and brokerage account was down because of the volumes, right? That should have been the biggest onboarding moment in DeFi's history because DeFi worked flawlessly while everything else was down. But guess what? Nobody cared because nobody was rushing to trade Solana or Fartcoin on a day when their portfolio was getting killed because of the yen carry trade. Now, if you could have taken your Nvidia stock, or you could have taken your oil futures, or you could have taken your Tesla stock off of your brokerage account into DeFi rails and traded it, it would have been the biggest onboarding day in history of crypto. But it didn't happen because the assets that people care about are not available yet on blockchain. So all I'm saying is, like, I don't care about Ethereum or Solana.
Like once this technology is mature, I don't think that the assets we care about now will be the same ones that matter at that point in time. Because like if we look at the Mag 7, like these are all things where they're like internet native, like they're not, so I do think it, like, I don't know, is it 2 decades, 25 years? Like, I don't know the exact time frame, but I do think at some point in history, it will be that the crypto native assets end up being bigger than the ones that are analog that eventually go on chain. It's just my opinion.
I think there'll be a couple, like Priceline.com is huge. Amazon.com is huge. Those were a couple of internet native companies that actually became big. But again, the majority of the internet usage of today's world is not because of internet native companies. It's because of regular companies and regular people that use it. So I actually love the fact that we disagree. I can't wait to do your show in 10 years and see who is right.
Well, I don't think it'll happen in 10 years. I think it'll be more like 25, 30. So,
I always go back to the Bill Gates quote that said people tend to overestimate what can be done in a year and underestimate what can be done in 10. I think the tipping point that we just hit in the last 6 months with this Washington overhaul that is basically allowing native assets to be brought on chain. I mean, again, like not just the new coins, not just your Trump coin or your Central African Republic coin or all these coins I'm talking about that are going to be issued in the future. Like Larry Fink at BlackRock is outright telling everyone we want more tokenized assets on chain. The CEO of Robinhood literally just last night on the earnings call said, we want to see more assets on chain. Like we just hit a massive tipping point. I cannot underestimate or underemphasize what I mean by that. Like a massive tipping point in the fact that all of these things that we have been talking about for years that could be now actually can be. And I really truly believe that the majority of the assets people care about are not crypto native assets. Like for every Bitcoin, there's 1,000 crypto assets nobody cares about.
Right now, we'll see. I mean, I don't know if I'll still be around in 30 years. I'll probably be like pretty darn old. So hopefully I won't be doing this. But anyway, Jeff, it was so fun chatting with you and sparring with you. I really enjoyed our chat. Thank you so much for coming on Unchained.
Thank you for having me. I always appreciate being here.
Don't forget, next up is the weekly news recap, today presented by Wondercraft AI. Stick around for This Week in Crypto after this short break.
Behold Quai Network, born of proof of work, a layer 1 to end the system's murk. With energy and currency entwined, the first energy dollar is designed. Decentralized, it stands both stable, strong. To scale commerce the globe sought so long. Unstoppable, it fuels the DeFi dream, where global trade and power cross the stream. Quai carves paths for monetary change, a platform where these forces rearrange. Sustainability and money blend. Discover how at QU.ai transcends.
Welcome to this week's Crypto Roundup. In today's recap, we cover the latest push for Ethereum ETF staking, the Trump administration's shift from a crypto council to industry summits, and Ripple and Galaxy Digital stepping in with a $160 million loan to keep the Trump meme coin frenzy alive. We also break down Hester Peirce's take on meme coin regulation, Brian Quintenz's nomination to lead the CFTC, and Franklin Templeton's move into Solana ETFs. That's not all. Uniswap has launched its own Layer 2 blockchain. BitGo is weighing an IPO, and the Central African Republic's meme coin launch took a dramatic turn. Plus, OpenSea is rolling out OS2 and teasing a C-token airdrop. And in the fun bits, CZ's dog Broccoli has become crypto's newest sensation. Because why wouldn't he? Thanks for tuning in to the weekly news recap. Let's begin. CBOE seeks SEC approval for staking in 21 shares. Ethereum ETF. The 21 shares core Ethereum ETF could become the first U.S. ETF permitted to stake its Ether holdings if a Form 19B4 filing made by the CBOE BZX exchange to the U.S. Securities and Exchange Commission is approved. The filing, which was made this week, proposes a rule change that would allow staking in the fund. According to the filing, staking would be conducted through a streamlined point-and-click method, aiming to minimize operational risks. Bloomberg ETF analyst James Seifert noted the significance of the request, stating on X, "I believe this is the first ETF to file with the SEC and request the ability to permit staking." The announcement triggered an immediate 6% rally in Ether's price, pushing it to an intraday high of $2,796 on Wednesday. The SEC's decision remains pending, with analysts speculating on a potentially more crypto-friendly regulatory approach under the new administration. Trump administration rethinks Crypto Council, eyes industry summits instead. The Trump administration is reconsidering its plan to establish a formal Crypto Council, opting instead for a series of industry summits, according to sources who spoke with Unchained. The decision aims to prevent internal conflicts within the crypto sector by allowing a rotating selection of industry leaders to discuss key policy issues. While details remain unclear, early summits are expected to focus on banking, payments, data centers, and Bitcoin mining. Sources also confirmed that trade associations have played a role in shaping these discussions. Trump initially promised a presidential council of advisors for digital assets in December, with David Sachs as chair and Bo Hines as executive director. However, Hines has reportedly been exploring alternative approaches in meetings with policymakers. Reactions to the shift are mixed. Some view it as a pragmatic way to gather expert insights, while others question whether the summits will have any real policy impact or merely serve Trump's business interests. Ripple, Galaxy loan $160 million to MoonPay to sustain Trump meme coin surge. Ripple and Galaxy Digital stepped in with a $160 million loan to help MoonPay manage overwhelming liquidity demands following the Trump meme coin launch on January 18th. The sudden spike in trading activity pushed the token's market capitalization from $200 million to over $10 billion in just 48 hours. But MoonPay faced a major hurdle. It couldn't access its fiat reserves due to a holiday weekend. MoonPay CEO Ivan Soto Wright and President Keith Grossman first secured $100 million from Galaxy Digital, with Mike Novogratz personally overseeing the deal. As demand surged further, Ripple CEO Brad Garlinghouse provided an additional $60 million, ensuring MoonPay could continue operating. The meme coin craze also led to the launch of Melania Trump's Melania token, further straining MoonPay's liquidity. The company successfully repaid the loans on January 21st after onboarding 750,000 new users during the frenzy. SEC's Hester Peirce says meme coins likely fall outside agency's jurisdiction. Hester Peirce, head of the SEC Crypto Task Force, said in a Bloomberg Crypto interview that many meme coins may not fall under the SEC's regulatory authority. Peirce explained that while each case would be evaluated individually, many of the meme coins that are out there probably do not have a home in the SEC under our current set of regulations. Peirce suggested that Congress or the Commodity Futures Trading Commission might take on the task of defining regulatory guidelines for meme coins. This statement comes amid growing concerns over the high volatility of tokens such as TRUMP and MELANIA, both of which saw massive surges before crashing over 9% and 89% respectively. As the SEC awaits the confirmation of a new chair, Peirce also remarked that formal rulemaking on broader crypto regulation could be a little premature at this stage. Brian Quintenz tapped to lead CFTC. Brian Quintenz, a former CFTC commissioner and current head of policy at A16Z Crypto, has been nominated by President Donald Trump to lead the CFTC, according to a White House document viewed by Unchained. His appointment could significantly shape the regulatory landscape for crypto markets as lawmakers push to expand the CFTC's jurisdiction over digital assets. Quintenz, who served at the CFTC from 2017 to 21, has been a vocal supporter of decentralized finance and industry-led regulatory frameworks. Brian has a long track record of supporting DeFi and advocating for sound policies that will enable DeFi developers and users to thrive, said Miller Whitehouse Levine, CEO of the DeFi Education Fund. His nomination comes as Congress considers market structure legislation that could shift regulatory authority from the SEC to the CFTC, a move supported by pro-crypto lawmakers and industry leaders aiming for clearer oversight in the U.S. Franklin Templeton and Grayscale push for altcoin spot ETFs. Franklin Templeton has officially entered the Solana ETF race, registering its Franklin Solana Trust in Delaware on February 10th. The firm joins a growing list of asset managers, including Grayscale, Canary Capital, Bitwise, VanEck, and 21 Shares, seeking regulatory approval for spot Solana exchange-traded funds. Meanwhile, Grayscale Investments has filed a 19BT4 submission with the SEC for a spot Cardano ETF under the ticker GATA. If approved, it would be the first U.S. ETF providing direct exposure to Cardano. Bloomberg ETF analysts James Seyffart and Eric Balchunas have increased approval odds for several crypto ETFs following SEC leadership changes, now estimating a 70% chance for Solana ETFs and a 75% chance for Dogecoin ETFs. Also, Franklin Templeton is expanding its $594 million money market fund to Solana. Uniswap launches Unchained. Uniswap Labs has officially launched the Unchained mainnet, a Layer 2 blockchain built on Ethereum, designed to enhance DeFi transaction speed and reduce costs. The network is built using Optimism's OP stack, making it part of the growing Optimism superchain ecosystem. Unchained aims to cut gas fees by 95% compared to Ethereum's mainnet while offering block times of 1 second, with future upgrades targeting 250 millisecond speeds. BitGo reportedly considering IPO in 2025. BitGo, one of the leading institutional crypto custody firms, is reportedly exploring an initial public offering as soon as the second half of 2025. According to Bloomberg, the Palo Alto-based company is said to be in discussions with potential advisors, though no final decisions have been made. Founded in 2013, BitGo provides custody, trading, borrowing, and lending services for digital assets, serving over 1,500 institutional clients across 50 countries. The firm processes around 8% of all global Bitcoin transactions by value, according to its website. BitGo's last funding round in 23 raised $100 million, valuing the company at $1.75 billion, with backers including Goldman Sachs, DRW Holdings, Redpoint Ventures, and Valor Equity Partners. If the IPO proceeds, BitGo would join other crypto firms such as Gemini, Kraken, and Circle in seeking public listings amid a more favorable U.S. regulatory environment under the current administration. Central African Republic's Memecoin launch sparks skepticism. The Central African Republic launched its own meme coin, CAR, on February 10th, with President Faustin Archange Touadera announcing the project on X. He described it as an experiment, meant to unite people and raise the country's global profile. The token debuted on Solana-based launchpad Pump.fun, following CAR's prior embrace of Bitcoin as legal tender. However, the launch was quickly met with questions over its authenticity. A deepfake AI detector flagged Touadera's video announcement as suspicious, and the token's official X account was suspended. The president later stated that the government was working with X to restore the account and emphasized that the token's supply was locked using Streamflow's infrastructure. Despite early momentum, CAR's price plummeted nearly 97% within 72 hours, falling from $0.89 to $0.24 cents, according to DEX Screener. OpenSea confirms C-token airdrop. NFT marketplace OpenSea has launched OS2, a revamped trading platform that integrates NFT and token trading while supporting 14 new blockchains, including Ethereum Layer 2s such as Sony's Soneum and Bored Apes ApeChain. The update is part of OpenSea's efforts to reclaim market dominance after facing stiff competition from platforms like Blur. As part of the upgrade, OpenSea confirmed an upcoming C-token airdrop, with allocations based on historical platform usage rather than recent activity. U.S. users will be eligible, though specific distribution details and timing remain undisclosed. OS2 will introduce reduced marketplace fees, meaning OpenSea's cut will be slashed to 0.5%, and it will also enable cross-chain purchases. Time for fun bits. Move over Dogecoin. There's a new top dog in town, literally. Binance founder Changpeng CZ Zhao has set the crypto world on fire by revealing the name and face of his pet Belgian Malinois, Broccoli. Yes, Broccoli. In a heartwarming post on X, CZ recounted how he unexpectedly received the dog from a zoo-owning friend and picked the name because it starts with a B and has some green in it. He even joked that it has a blocky sound because even CZ's dog can't escape crypto references. Naturally, the meme coin frenzy erupted instantly, with traders racing to launch broccoli-themed tokens on BNB chain. While CZ insists he's not launching a coin, he hinted at the BNB Foundation rewarding the best broccoli memes. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.beehive.com. That is unchainedcrypto.beehive.com, and sign up for our free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin with help from Juan Aranovich, Matt Pilchard, Megan Gavis, Pam Majumdar, and Margaret Curia. The weekly recap was written by Juan Aranovich and edited by Kari McMahon. Thanks for listening.